Welcome to Grab the Horns. Today the stock that we're going to be analyzing is Talbots. Ticker symbol is TLB. Now what we're going to be looking at is who is this company, what do they sell, who is their prime niche, who do they market to, and is this a good short-term investment, long-term investment, or investment at all? So we've put together a good presentation here. Let's go ahead and dive right in, take a look at this company. So here's Talbots. Who are they? That's the main question that we want to address right now. Talbots is a multi-channel retailer and direct marketer of women's apparel, shoes, and accessories. Basically, the people that they're looking to serve, their niche is women in the fast-growing 35-plus age range that mostly try to shop in their stores retail, through mail and catalogs, or online at talbots.com. So what we're going to do is look at their main page here. This is talbots.com right here, their front cover. And as you can see, this kind of gives you an idea of some of the things that they'll market. Here's another page here. This is their apparel, so their clothing. As you can see, they really tailor to the women, and this is really some of their main type of clothing that they will sell here. Another idea as well is not only do they do apparel, but they also go into shoes and accessories. Here's a great pair of shoes here, a purse to give you an idea of that. So that kind of discusses who Talbots is, who they market to. Again, a company really looking to hit that niche of the women 35 plus. So with that said, let's go ahead and focus on the stock now and see, okay, with the business aside, is this a good investment? Is this something that we want to be investing in the long run or in the short run? So what we're going to do is we're going to take a look not only at Talbots but at a couple of other stocks as well, Tiffany & Co. and Coach. These are good examples, retailers who are looking at that same niche. So as we see here, with Tiffany & Coach, both of these stocks are coming off of their 52-week highs. These are both 6-month charts here, but you can see that they've hit those highs just recently in the last few weeks here. They've come down a little bit since there, but still they had a nice run up, and they have had a little bit of a sell-off from there, but still taking into consideration where we are in the economy right now, a very good job on both of these companies. They've done a good job so far. Talbots, different story. Huge volume today in a bad way. You can see here almost 40 million shares traded hands today. The average is around 3.3 million shares that are trading hands. So not a good thing when you see almost 40 million shares on a red line there. That's a very bad thing. So that leads right into this 40.5% drop that Talbots experienced today. Closed at $2.63, down $1.79. Very, very, very bad day in the market for Talbots. And the other thing that you want to look at here is not only was it a bad day, but you look back, this is also a 6-month chart. They've steadily gone down over the past 6 months. Today just capped it off with a 40% loss. Talbots is hurting right now. A couple of reasons for that is weak earnings. They haven't been doing so well on that, and that's really hindered them. And you can see, again, 40.5% drop today. That really, really hurts them. Dismal outlook for the current quarter, not looking so good. This is the CEO of Talbots, Trudy Sullivan. Now, Trudy came out and said, we expect a second quarter sales and gross margin will be significantly below last year, resulting from high promotional and markdown activity as we work to clear slower moving goods and better position ourselves for the fall. Now, as an owner of a company, that's the last thing you want to hear from your head of the company, because that's basically saying that the stuff that's on the shelves right now is not selling. We're doing whatever we can just to get it out of the stores, because right now we're having a problem selling this stuff. When it says promotional and markdown activity is getting higher, that signifies to me that the things that they have sitting on the shelves are still sitting there. They're trying to mark them down, do whatever they can to sell those different retail products that they have there. So not a good sign. Next thing that we're going to look at here is their retail stores. Now, 50% of Talbots' business is done online now, so it's no question that their retail stores are going to fall off a bit. But if you look at this little chart here, you'll see that an estimated 30% of their stores are going to close in the next 3 years. This does not bode well for Talbots. Back in 2008 when they reported they had over 570 stores, I'm sure it's gone up from there. You're losing 30% of those stores in the next 3 years. That's a gigantic retail market that you're going to be losing. Hopefully they can transition that, really do well on the online sales and through their catalogs. But if not, they're in for it right there, because losing that much of your retail space is a bad thing. So with that said, getting back to the fundamentals of Talbots, one of the things that you want to be careful of is over the next few months, this stock could really see some major lows. It could revisit those 2009 lows where it dropped below $2 a share. It's got poor performance and a dismal outlook for this quarter, could as well for the next 6 months to a year. I think this will be a good stock to watch over the course of the next year, maybe two, as it could hit those lows and bounce back up over the next 2 years, have a success story. Something you'll want to watch closely here. I don't think in the near term this is going to be a good play to own. I think in the longer run this could be a good stock to pick up on the cheap, possibly ride it up when the economy, retail sales start to pick back up. You could see the stock increase over the longer run. So I hope that helps. Good analysis of a company today. I hope this was helpful to all of you. Like always, get out there, grab the horns.